What is going on, investors? Back again. Happy Friday to everybody. Welcome to our FAANG stock plus Microsoft and Tesla recap show. We'll go over all the FAANG stocks: Facebook, Apple, Amazon, Netflix, Google, Microsoft, and Tesla. And then we'll jump over the chart and see what's going on with these ones. We'll run down a little bit of the news as well. Facebook started the week at 290. Like a lot of these stocks, it was interesting. The broader markets were up huge this week. The tech stocks, or whatever has been working the last few months and basically all year, sold off a little bit. And so we'll talk about broadly if that's a good idea or not, if it creates a buying opportunity. Facebook started the week at about 290, ended the week at about 277, down just a fractionally. Not a lot of news coming out of Facebook. I think they're laying low, probably a wise thing to do while you have a lot of the election stuff kind of getting over with. And so Morgan Stanley, though, sees Facebook and Google and Pinterest gaining from online ad comeback. I got to agree. I think there'll be obviously there's just been this huge shift to online advertising, but I think it will continue as consumers continue to stay more and more comfortable, maybe working from home as well. So moving on to Apple, started the week up a lot higher than it was. Actually, no, it was down fractionally. Started the week 119, but did tick up into the 121 and then sold off actually pretty low, created a decent buying opportunity down at 114, but finished the week basically flat. Berkshire Hathaway looks like this is not confirmed, but it looks like they've sold about $4 billion worth of stock. Now, that's a lot of money, but to Warren Buffett, he had, I think, about $111 billion worth of the stock just a few months ago. And so not necessarily that big of a selling from Warren Buffett and crew over there at Berkshire Hathaway. Now, the big news for Apple was they actually launched some new computers with their own in-house chips or in-house silicon, as it says here, basically breaking up with Intel. And it should be a process over the next 2 years where Apple goes fully away from Intel and actually only builds their own chips. What I noticed is all the computers that they listed and they have for sale now were all basically the same price or even a little bit cheaper than the previous generation. You have the Mac Mini, looks like that starts at $100 cheaper. You have the MacBook and the MacBook Pro. And so pretty, compelling offerings. If you're in for a new computer, if you're due for a new computer, it looks like to me the chips that they release do create some feature benefits in terms of starting up faster. Definitely not something I'm going to personally upgrade to right away, but I think the second, third, fourth generation of these Mac chips might be really, really compelling. It might force you to upgrade because it might be a significant improvement over the Intel versions that are out today, but I still think we're probably a year away from that. Amazon started the week at 3,186, ticked up a little bit higher than that, up into the almost $3,300 range, but sold off and ended a week basically flat at $3,100. Not a ton of news out of Amazon, although they did have some antitrust charges levied by the European Commission, and these antitrust, as someone like me, I sell on Amazon. It's one of the businesses that I run. And this totally goes on, and it's totally true that what Amazon does is they use e-commerce data that they acquire by sellers like me, and then they create their own products or own competing products, or they basically use the data on the platform to allow them, Amazon, to sell products that fit inside their ecosystem. And so it's definitely a big problem. Sellers much larger than me have horror stories about this, and I think Amazon's in a little bit of trouble here. It probably won't be a material effect to their business, but it will impact their business model a little bit. I think Amazon is going to have to make some changes here, earn the trust back of some sellers as well, because it is well known inside the Amazon community that Amazon uses data and will allow you to sell through some products. Once you are successful, they'll come in with a competing product and it's basically game over for you. So it's a good thing, in my opinion. It's good that the European Commission is trying to get Amazon to stop this practice. We've also seen it when Jeff Bezos has testified here in the United States that this is likely going to create some kind of change in Amazon's business, but I don't necessarily think think it's going to impact them financially, at least not in the near term. Internet retail sells off. So this is what I was talking about. So we had these positive developments here with the virus vaccine, and all the internet retailers sold off. And now it's kind of interesting because we have a candidate or a president-elect, at least from, most media outlets are projecting that. And I saw this week that he is projecting a 4 to 6 week shutdown. This would be into next year after he takes office. This would be sometime in the spring of next year to have a 4 to 6 week shutdown with likely some stimulus going out. So in my opinion, that would actually benefit Amazon and the rest of the internet or retailers, especially if you had that come down from a federal mandate. That would definitely, in my opinion, benefit somebody like Amazon. So the fact that it's selling off despite positive vaccine developments, again, that is offset a little bit that we've seen news out of the potential future administration that looks like they want to have a nationwide shutdown, at least here in the United States. Obviously, we're seeing that across the world as well. Netflix, not a whole lot going on with Netflix. Netflix is laying low. $476 started the week, kind of melted up just slightly to $483. Interesting stuff here coming out of Netflix in France. They're offering a TV channel. It's basically like your old school linear TV where you turn on ABC or turn on ESPN or something and just watch whatever's on. That's what they're launching in France. They say based on the market there, that's kind of what the market could potentially want. So it'd be interesting to see. We've talked about this on the show, like what's next for Netflix? Okay, they have to raise prices to generate more revenue. I think they've kind of saturated their user base, at least here in the United States. I don't think globally, but here in the United States, they're probably pretty well saturated in terms of their market. And look, it's a great big business, but what's next for Amazon? How else are they going to make money? Maybe this type of offering could potentially be in the works. Google, been absolutely phenomenal performer over the last few weeks. Started the week basically where it was at, $17.90, melted down just a slightly. Turkey fined them $25 million, which is basically like fining you $25. Not a big price tag, but again, probably just a precursor to things that are coming across the world and potentially maybe here in the United States. They say Google is making it difficult for companies to show up in search results. Again, another one of my businesses is actually advertising in Google, showing up in the results. I happen to pay for my results, but I know lots of people in this business that would agree that Google does make it difficult for you to show up in results, especially when they have a competing product like search for videos on Google, and they're going to lead you to YouTube. And I mean, it makes a lot of sense for Google, but from an antitrust perspective, could create some problems there. Microsoft had a big week in news, started the week at 224, melted down to 216, maybe kind of a sell the news. What was the news? That's right. The next generation Xboxes came out along with the PlayStation. And so these are both available at a retail price at $500 for the traditional disc versions. And then you have like a discless version at $299. Obviously, they're super hot right now. I've been seeing them sell for about double the retail price. Eventually, that that kind of works its way through the system. There's enough supply of them into next year. You're probably going to be able to find these closer to a retail price, but obviously is a big part of Microsoft. It's about 10% is what I read of Microsoft's business. And so it'll be interesting to see if that can accelerate into next year, because obviously gaming has been just absolutely red hot this year and kind of a stay-at-home trend. And will that continue into next year? If we start seeing movie theaters open, start seeing theme parks open, start seeing sporting events open, casinos more open, will it lead to a decline in games, or will these new Xboxes and PlayStation keep gamers enthusiastic? My bet's probably on the latter. These next-gen consoles tend to get people excited about playing games. Plus, if you're paying double retail, you're probably going to sit there and play a lot of games on that. Finally, Tesla. Interesting week for Tesla. Started the week at about 430, ticked up to about 450, but then melted off as the week went on. But what was interesting is a lot of other electrical vehicle stocks, especially the ones out of China, NIO, Li Auto. I know I have a lot of people asking me for NIO. I think they report earnings next week. We will definitely get to Li Auto and NIO next week. Maybe XPeng too. We'll probably do a video on them as well. But all the electric vehicle makers did really well this week. Tesla kind of sat that out. They say, they sit the lap out. Tesla's obviously had tremendous performance, and we'll see what happens with Tesla. Now, let's jump over to the stock charts. We got Facebook sitting right in the middle of the range. When it ticked up, I think this was last week, it ticked up into here, and it was either going to retest these highs, but we've seen with a lot of these stocks, this will be kind of a recurring theme here on the charts, is that these stocks are testing these all-time highs, and they're getting rejected. Everyone except for Google has not been able to retest and push through these all-time highs. So Facebook's kind of sitting out, kind of chilling here. Again, we're kind of in the middle of things. We've got to move into next year, and I think you see some online advertising coming back. Not a bad spot if you want to start a position in Facebook. Obviously, down in here would be amazing. 448. If you had a more reversal in the stock, take a look at our 50 moving average has completely rolled over here. Our volume fell off this week, and so any kind of selling pressure comes in, this stock could make its way down to the 260 range and then further down to the 250 range. Anywhere in between there is where personally I would step in, since I'm already kind of overweight the name. Moving on to Apple, just hung out. I mean, it came up here and it's like, Michael Jordan, come fly with me. It just kind of hung out up here, kind of gliding up here at the 119 and, between 115 and 119, just hanging out here. But our 50-day moving average has turned negative. Our volume slid off this week, so that's kind of interesting. We'll see what happens. This stock, just like Facebook, is just kind of in a let's see what happens range. Again, here's our all-time highs. We tried to push through them here, did a back test of this long-term trend line, got absolutely rejected. So we'll see if we can come back up in here anytime soon. Would be in the 130s to 135 range, would be a back test of this longer-term trend line. And so we'll see if this stock, if it can push back up into here, it'd be a bullish sign. But if it comes back down in here, 109, 110 is proven to be a pretty solid buy spot, because you see here it has acted as support for Apple. Amazon is chilling right in the middle of our ranges here. So here we are, the upper end of the range. We peaked through just like Apple did and Facebook. When we peaked through, we got rejected, came down here. Our 50-day moving average is negative. That's a problem. Volume fell off on this stock. We're right in the middle of the range. We're also getting towards the end of the trading season. People might step in and sell winners like Amazon, like Apple, like Facebook. They might sell these stocks, like especially big money managers, to show winning years to their potential investors going into 2021. That could keep a lid on these stocks as well. In my opinion, Amazon is a buy down here between 2,900 up into 3,000. Anywhere down in this box, in my opinion, is not a bad place to buy Amazon. Moving on to Netflix, we've called this one pretty accurately. When it's popped its head up over this upper trend line, about 510, anytime, and it's blown up when it's gone up there, it's continued to melt off and kind of sell off. And now Netflix is down in this range where it is a viable buy, in my opinion. Anywhere from 467 up to about where it is, 485, is a good place, in my opinion, to buy Netflix. So anywhere, you see here, buyers have stepped in inside this zone. So if you want to buy Netflix, I certainly would not blame you for jumping in down in these levels. This has been a predictable spot where buyers stepped in, at least for the last few months for Netflix. And then if you want to play like kind of the pops and drops, when it pops up here over 510, that's when you can maybe set a trailing stop loss and have it come back to you and unload that thing. Now, moving on to Google. Now, Google, again, what we've talked about is, could Google be previewing what could potentially happen to Amazon, Apple, Facebook, and the other stocks that eventually, once they come up here to all-time highs, take a look. Google broke through those all-time highs and now is hovering up here like a plane just kind of taxiing, waiting to land. And so if you're a long Google like I am, you're just kind of hoping it chills out here, and then we move into next year and have some more positive progress. So that could potentially, what you're seeing happen here with Google could potentially happen with these other stocks. I would guess not until, or probably 60, 70 days away from earnings for those guys. And so you might have to wait until they're able to push back up into these all-time highs. But it's a sign that Google, once it broke up into these all-time highs, it is a good place to be. Now, we are back testing this longer term trend line that was in place. This will act as pretty firm resistance on the way back up. But if it's able to break up above that, then boy, that would be an even more bullish sign for Google. Now looking at a Microsoft, this one kind of looks like this is like this kind of cup and handle formation. So could we break out above this? Microsoft needs to get above 225 and kind of close solidly above it. Here's our all-time highs. Our all-time highs are closer to the 230, 235 range. And so can Microsoft get back up over here? You'd think with the Microsoft Xbox and things like that, we'd be right there, but we're actually sitting right on top of like an upper trend line right here that we've had drawn in for a while. So I personally wouldn't necessarily want to step in here. I'd watch this one and see if it wants to pop up above. If it pops up above, sellers have stepped in. I wouldn't be willing to jump in there until we really pushed above it and maybe retest these all-time highs. More convincingly, the volume has kind of fallen off all these stocks. I'd like to see this one pull back to 205 and maybe below, down into the 190s. This is where I'd step in. You see anywhere down between 190 and 205, buyers have stepped into this one. This is where I'm trying to target Microsoft. Finally, taking a look at a Tesla, again, one of the more high-flying stocks during the beginning of the year. Now it's been like super predictable. Actually, take a look at just like this is like almost 2 months of trade. We've just waved out here between, call it about 382 and up to about 455. This stock is just waved in here. And I personally don't necessarily see any reason for that not to continue. If this stock pulls down into the 385, 386 range, that is a place where you can step in on Tesla. And if you want to sell it as it comes up to 440 and above, that is where sellers have stepped in. Now, any close above, I'm going to say about 465, any close above that on strong volume and strong momentum, this stock could retest the highs, which are back at the 500, 502 range. And so that's what we're really looking for with Tesla. Now, if it breaks down, it should make a stop down here at the 340, under 340 range. This is where I also would step in and potentially buy another share of Tesla. Well, there you go, guys. That was the FAANG stock recap, a week where the stocks have kind of sold off a little bit. I don't necessarily think it was justified. We just had a little bit of rotation from what has been working to stuff that likely has been oversold. I think going into next year, if you have more shutdowns, if you have more online shopping, if you have things not fully reopened, the same stocks that worked in 2020 probably going to work in 2021. Any further pullback in these stocks, I think, is a buying opportunity, not something that you want to sell into. So there we go. That was the recap. Hopefully you guys have a great Friday and a great weekend, maybe watching the Masters like I will. Hopefully you guys are doing well. Good luck with your investments.